The decision came as no surprise as inflation eased back to 4.6% in August from 5% in July. Lower oil prices helped to cushion the impact of the weaker rand, and with growth contracting in the second quarter, most economists felt it was the right move.
I think there was a general expectation that he would not move interest rates. I think there's far too much uncertainty for him to have increased interest rates at present.
On the growth story, he kept on repeating that, the economy is under a lot of pressure, demand is very weak, there's some constraints to production, so the growth outlook is less favorable.
But the Reserve Bank delivered a rather grim outlook for the economy going forward. Domestic growth in South Africa is taking strain as a result of power shortages, rising costs and low capacity. It remains more vulnerable to global economic shocks.
Growing concerns of the risk of an abrupt slowdown in the Chinese economy have been fueled by excess capacity in the real estate and the industrial sectors of the economy. While to date the actual slowdown has been relatively moderate, a hard landing could have a severe impact on global markets and on commodity prices in particular.
The Reserve Bank lowered its growth outlook down to 1.5% for 2015. While growth is contracting, it does seem like the immediate threat of recession has abated.
The risk of recession, is, I'll say it's moderate. We have to think, where will the recession come from? Unless we see a significant disruption to production locally, we're not looking for a recession, not this year. Next year, we are worried a bit because many of those multi-year wage agreements in the manufacturing and mining sectors will be renegotiated.
The bank said it will continue to monitor events globally and its impact on the rand and will act accordingly.
I think there is a chance that we could move before the US Fed. I do believe that we are on a US Fed watch, most definitely. What is going to be critical for South African interest rates is how far are American interest rates going to rise. If that does happen, the South African economy will have very little option but to see those increases in interest rates.
MPC members were unanimous in their decision to keep rates on hold. However, all indications point to some policy tightening by year-end or early next year. Consumers for now are breathing a sigh of relief, and it does seem like many consumers have cut back on their spending, as the governor pointed out that even the retail sector is starting to record lower growth. It's going to be a tough balancing act for the Reserve Bank as it goes forward, as it tries to contain inflation against a contracting economy. Sumitra Nadu, CCTV, Johannesburg.